Imagine waking up one morning and finding out that the United States government is no longer just regulating Bitcoin, arguing about Bitcoin, or seizing Bitcoin from criminals, but it's actively trying to turn Bitcoin into a national strategic reserve asset. Not a meme, not a campaign slogan, not another rumour spreading across crypto Twitter. An actual piece of legislation introduced in Congress designed to establish a strategic Bitcoin reserve for the United States. And once you start looking into it properly, the story becomes less about crypto markets and more about how governments are beginning to think about digital assets in general. Because a few years ago, Bitcoin was mostly discussed as a speculative internet asset. Regulators talked about risk, fraud, and enforcement. Politicians barely understood it. Traditional finance treated it like a fringe experiment. Now, the conversation has shifted towards reserves, custody infrastructure, sanctions, national balance sheets, and strategic advantage. This is a very different phase. So, today we need to talk about the ARMA Act, why Congress may only have a short window to push this through, why seized Iranian crypto assets have suddenly entered the conversation, and what all of this says about the direction Bitcoin may be heading in globally. If you're new here, welcome to the channel. My name's Paula. And on this channel, we look at crypto, macro, regulation, and the bigger structural changes happening underneath the market. Not just price action, but the systems, incentives, and global shifts that could shape where crypto goes next. And before we start, nothing in this video is financial advice. I'm not telling you to buy, sell, hold, or trade anything. This is about understanding what's happening structurally because the structure underneath this market is changing very quickly. So let's start with what actually happened. Congressman Nick Begich has introduced the American Reserve Modernization Act of 2026, known as ARMA. The proposal would formally establish a strategic Bitcoin reserve for the United States and build on the executive order signed by President Trump back in March 2025. That distinction matters. The executive order created the reserve framework, but executive orders can be reversed by future administrations. Legislation passed through Congress is much harder to unwind. So, what we're looking at now is an attempt to move the strategic Bitcoin reserve from temporary policy into permanent law. And according to Bedich himself, Republicans may only have a limited political window to do it. Reports around the bill say Republicans are working against the clock ahead of the November midterms because control of Congress could shift afterwards. In other words, this is not being framed as a long term theoretical discussion, there is urgency behind it. Now, the executive order signed in 2025 already changed the tone of the conversation significantly. The White House described Bitcoin as digital gold and talked about the strategic advantage of being among the first nations to establish a reserve. That wording is important. Governments do not usually talk about speculative assets in terms of strategic advantage. This is the language used for energy reserves, gold reserves, rare earth materials, defense infrastructure, and national security resources. So immediately, Bitcoin is being repositioned politically into a completely different category. And this is where the wider implications start becoming interesting. Because once a government begins discussing an asset in strategic terms, the conversation moves away from short term market speculation and towards long term positioning. The question changes from will Bitcoin go up this year to should nations hold Bitcoin at all? Those are two completely different discussions. Now, according to reports surrounding the ARMA Act, the proposal would allow the Treasury to accumulate up to 1 million Bitcoin over time, equivalent to roughly 5% of total supply. That number has been compared to the percentage of global gold reserves historically held by the United States at Fort Knox. That comparison is deliberate. When Bedich calls this the new Fort Knox, he's not simply making a crypto argument, he's framing Bitcoin as a modern reserve commodity. Fort Knox is symbolic. It represents hard assets, national wealth, security, and long term financial strength. The link in Bitcoin to that imagery tells you exactly how supporters of this bill want the public to think about it. Not as internet money, not as a trading token, but as strategic digital scarcity. And scarcity is really the centre of this whole debate because, unlike fiat currency, Bitcoin can't be printed. Unlike commodities like oil, new supply cannot suddenly be discovered. Unlike government debt, more units cannot simply be issued whenever needed. There will only ever be 21 million Bitcoin. And if governments start viewing that scarcity as strategically valuable, then timing suddenly matters. Because if one country accumulates early, other countries eventually have to decide whether they want exposure to or whether they're comfortable being left behind. That's where the game theory starts creeping into this conversation. Now, this does not suddenly mean that every country rushes to buy Bitcoin tomorrow morning. It does not mean Bitcoin becomes the world reserve currency overnight, and it definitely doesn't mean this bill is guaranteed to pass. But it does show how much the political framing around Bitcoin has evolved. 10 years ago, Bitcoin was mainly associated with Silk Road headlines and regulatory crackdowns. Today, the United States government already holds hundreds of thousands of Bitcoin through seizures and forfeitures, and politicians are debating whether those holdings should become part of a strategic reserve system instead of being sold. That's a dramatic shift. And the way they're talking about those holdings is fascinating too. According to Fox Business and several policy reports, one funding mechanism being discussed involves seized crypto assets tied to Iran through Operation Economic Fury. This is where the story becomes much broader than the crypto markets. Because now digital assets are sitting directly inside conversations around sanctions, economic warfare, treasury operations, geopolitical pressure, and national strategy. And that changes the tone immediately. Most people still think of crypto adoption through the lens of retail investors, exchanges, ETFs, or payment apps. But some of the most meaningful adoption may happen quietly through governments building infrastructure around seized digital assets, cross border enforcement, reserve management, and custody systems. That's a very different type of adoption. And this is something I think a lot of retail misses during quieter market periods. While people focus heavily on short term candles, infrastructure keeps developing in the background, governments keep adapting, legal frameworks keep evolving, institutions keep building systems around digital assets, regardless of whether the market is green or red that week. That process matters more long term than most daily price movements. Now, to be very clear, we should not exaggerate what's happening here. The reports around seized Iranian crypto assets do not mean the United States is simply taking random assets and instantly converting them into reserve Bitcoin. There are legal procedures, forfeiture processes, and Treasury rules involved. But the broader point still stands. Seized crypto assets are now part of national reserve discussions. That alone tells you how far the conversation has moved. The original executive order already stated that Bitcoin forfeited through criminal or civil proceedings could be transferred into the strategic Bitcoin reserve instead of being liquidated. Historically, the US government often auctions seized Bitcoin relatively quickly. Looking back, some of those sales now appear incredibly expensive in hindsight, given how much Bitcoin later appreciated. So, policymakers are asking a different question. If Bitcoin is scarce, and if governments already possess significant holdings, why sell them immediately? Why not treat them as reserve assets instead? That is the core shift happening underneath this story. And once you begin treating Bitcoin as a reserve asset, another issue suddenly becomes incredibly important: custody. Because if a government is serious about holding Bitcoin strategically, it needs secure infrastructure around private keys, storage, recovery systems, legal authority, accounting standards, and asset protection. With gold, you place bars in a vault. With Bitcoin, control comes from private keys. Lose the keys and the asset is gone. compromise the custody system, and the reserve becomes vulnerable. That's why comments from the White House Digital Assets Advisor, Patrick Witt, are important here. Witt recently stated at Consensus 2026 that the legal and custodial framework around the strategic Bitcoin reserve had reached key breakthroughs. Again, notice the language: custodial framework, legal framework, asset protection. This is no longer the language of speculative trading. This is the language of institutional infrastructure. And personally, I think this part matters more than most people realise. Not because it's flashy, but because it shows governments are learning how to hold digital assets properly. That may sound boring compared to price predictions, but structurally it's huge. Because once governments develop secure systems for custody, reporting, reserve management, and digital asset protection, crypto becomes harder to treat as a temporary trend. It starts becoming part of the financial architecture itself. And this also links directly to the wider conversation around self custody. In crypto, people often say, not your keys, not your coins. At the sovereign reserve level, the exact same principles apply. If a nation does not securely control the infrastructure around its reserve assets, then strategically it does not fully control those assets. And once Bitcoin enters sovereignty discussions, the stakes become much larger than market speculation. Now, let's zoom out further. Why is this happening now? Part of the answer is the global macro environment. Over the last several years, central banks around the world have massively increased gold purchases. Countries have become more aware of reserve diversification, sanctions exposure, and geopolitical dependency. The freezing of sovereign reserves after the Russia Ukraine conflict changed the way many governments think about reserve risk. It reminded countries that reserve assets are not always politically neutral. That does not mean Bitcoin replaces the dollar. It does not mean gold disappears. It does not mean governments abandon traditional systems. But it does mean nations are increasingly thinking about optionality and resilience. And Bitcoin fits into that discussion because it's scarce, borderless, and not directly controlled by any single country. Ironically, that's also what made governments nervous about it in the first place. Bitcoin was originally designed outside traditional financial systems. Yet now parts of the traditional system are exploring whether Bitcoin itself should become strategically important. And that contradiction is fascinating. The system spent years resisting Bitcoin and now is slowly adapting around it. That's a very different dynamic from what most people expected a decade ago. And this is why I keep saying that crypto's moving into a transition phase. The market is maturing, the incentives are changing, the participants are changing. This is no longer just retail traders speculating on volatile assets in isolation from the real economy. Crypto is increasingly connected to macroeconomics, treasury policy, regulation, institutional finance, and geopolitics. That connection creates opportunity, but it also changes the character of the market. And I think this is why many retail traders feel disconnected right now. For years, crypto felt simple. Money printing went up, liquidity flooded the market, everything pumped together. But as the market matures, capital becomes more selective. Regulation matters more, infrastructure matters more, utility matters more, political alignment matters more, and that changes how the market behaves. Bitcoin increasingly looks like a reserve grade asset. Stablecoins increasingly look like payment infrastructure. Tokenization increasingly looks like capital markets infrastructure. Projects connected to real world financial systems begin attracting more serious institutional attention. That does not mean smaller speculative assets disappear, but it does mean that the market starts differentiating between narratives more aggressively. And Bitcoin's narrative is becoming clearer. It's increasingly being framed as digital reserve collateral. That framing matters because governments understand reserves, they understand scarcity, they understand strategic positioning. They may not fully understand every DeFi protocol or AI token narrative, but they understand hard assets and balance sheets. And this is why Bitcoin keeps moving closer to institutional and governmental acceptance faster than many other parts of crypto. Now, we should still be balanced here. There's absolutely criticisms of this proposal. Critics argue Bitcoin is too volatile to function as a reserve asset. That criticism is fair. Bitcoin can move violently in both directions, and governments traditionally prefer stability in reserve management. Others argue that the government should not expose itself to a speculative asset at all. Some see this as political theatre designed to attract crypto voters rather than serious long term policy. And there are still important unanswered questions around how the reserve would actually operate in practice. The executive order referenced budget neutral acquisition strategies, meaning the reserve should theoretically expand without increasing taxpayer burden. But what does that actually mean operationally? Asset swaps, revalue certificates, future forfeitures, Treasury restructuring, those details matter enormously. So, again, it's important not to drift into hype territory here. This bill is not guaranteed to pass. The reserve is not fully implemented yet, and governments move much slower than crypto Twitter narratives suggest. But even with those caveats, the direction of travel is still very clear. The United States government is no longer discussing whether Bitcoin should exist, it's discussing how Bitcoin should be managed. That is a completely different phase of adoption. And I think this also changes the hierarchy inside crypto itself. Because if Bitcoin becomes strategically important at the sovereign level, the wider market may become even more selective moving forward. Bitcoin increasingly sits in its own category, scarce digital reserve asset. Meanwhile, other crypto projects will increasingly be judged on infrastructure, interoperability, payments, settlement, liquidity, tokenization, AI integration, compliance, and real world usage. And that's why I think understanding macro and structure matters more now than it did during previous cycles. Because crypto is no longer isolated from the wider financial world, it's becoming integrated into it. Now, there's another part of this story that I think could become very important over the next few years: signalling. If the United States formally establishes a strategic Bitcoin reserve through legislation, what message does that send globally? It signals that the world's largest economy sees strategic value in Bitcoin holdings. And once one major nation publicly treats Bitcoin as a reserve asset, other governments eventually have to decide whether they want exposure to, or whether they're comfortable ignoring it entirely. That's where supply dynamics become interesting, because Bitcoin supply is fixed. ETFs are already absorbing supply. Corporate treasuries are already accumulating supply. Long term holders continue removing supply from circulation. If governments eventually join that competition more aggressively, the long term dynamics of the asset become very different. Again, this does not mean price only goes up forever. Macro conditions still matter, liquidity still matters, rates still matter, recessions still matter. But structurally, the supply narrative becomes harder to ignore. And this is why I think people should focus less on the daily noise and more on the direction of the infrastructure. Price tells you what traders are doing today. Infrastructure tells you what institutions are preparing for tomorrow. And right now, the infrastructure around Bitcoin is evolving extremely quickly. We have spot ETFs, corporate treasury strategies, government reserve frameworks, custody breakthroughs, digital asset legislation, strategic reserve proposals, cross agency crypto infrastructure, treasury discussions around digital assets, and increasingly serious conversations around sovereignty and financial resilience. That is the real story underneath the market, not just whether Bitcoin pumps next week. The bigger story is that Bitcoin is gradually moving into the architecture of global finance and national strategy. And whether people love that idea or hate it, the shift itself is becoming harder to deny. Now, if you're someone trying to navigate all of this on your own, I know how overwhelming it can feel sometimes. There's constant news, constant volatility, and constant noise. That's exactly why we built the Crypto Wolfpack community. It gives people somewhere to actually discuss the markets properly, share ideas, look at macro events together, learn strategies, and avoid feeling isolated trying to navigate this space alone. And if you want to know the exact strategies we use to make money in the Crypto Wolf Pack in both the bull market and the bear market, we've made a completely free course for you. It's called the Crypto Liftoff course, and the link is in the description below. Also, don't forget the UK Crypto Podcast hosted by me and Milkshake Matty. New episodes go live every Friday, 7 p.m. UK time, right here on YouTube. You can also find us on Spotify and TikTok. If you enjoyed this video, please give it a like, subscribe to the channel, and let me know your thoughts in the comments. Do you think the United States will eventually formalise Bitcoin as a permanent strategic reserve asset? Or do you think this remains mostly political positioning for now? Either way, the conversation itself has already changed. And that may end up being the most important part of the entire story. Thank you so much for watching, and I'll see you in the next one.